previously struggling Canadian sectors. Joining us to kick off our coverage this hour is our regular guest, Petursson. He's Chief Investment Strategist at IG Wealth Management. Nice to see you.
Good to be here.
Kind of getting to the end of the first quarter, a nice pause point for investors, and it has been a positive start to the year. I mean, what's been your observation so far?
Well, it's been a continuation of the rally that started really October 31st, if you want to go back to Q4 2023. And I would argue that it's been all based on an improving economic environment. We've passed through the recession risks of say, late 2022, early 2023, without actually having an official recession. We've turned the corner on earnings growth, where our expectations for earnings are much more positive this year and going into 2025 than last year. So these are the makings. And in addition to that, we have interest rates that are coming down eventually this year. So this is all of the makings of the start of a nice rally.
And for those who get a little uncomfortable just when there has literally been a rally, what do you say to those folks?
Well, we need to put our fears aside. It's the whole idea of, oh, the market's too strong, we're due for a pullback. Well, our research would show that, to your point, yes, a strong first quarter only happens 5 in the last, 84 or 80 to 85 times. That's about 15% of the time. Are we prone to a correction more so than any other period? Our research would say no, we're not. You get a correction 25% of the time at any moment in the marketplace, including now. In fact, what our research does show is that you get a further boost in market gains following strength in the market.
Okay. Would you be prepared for a little bit of volatility in these next few months, or you're not even buying into that idea?
Not even buying into it. I think trying to prepare for a correction is a fool's game. There's nothing predictive about a correction. They happen just out of normal market activity. I would take advantage of it, but would I be more defensive now just because the markets are up more than 20% in the last 6 months? No.
Interesting. And then your overall view, let's talk about the Canadian economy specifically, because the TSX putting together a pretty good quarter itself. What's your view on what's happening with the economy here right now?
The Canadian economy is much weaker than what we have in the United States. And if you strip out exports, last quarter, the Canadian economy, in fact, shrunk. Domestic demand was down 0.7% on an annualized basis. That's not good. So you compare that to what's going on in the United States, far more strength in the U.S. economy, and the difference is the interest rate impact on the consumer. Far more immediate, given our mortgage structure in Canada, much less so in the United States.
Does it influence how you think about where you're investing money in the equity market?
It does.
Okay.
It does. Not that the Canadian equity market is necessarily the Canadian economy, but there are other factors within the Canadian equity market that suggest, being underweight Canada, overweight the rest of the world is a better approach, as we've seen with the returns in the first quarter as well.
Okay. Now, speaking of the Canadian economy, the Deputy Governor of the Bank of Canada, Carolyn Rogers, had a speech this morning where she talked about hoped for productivity. Obviously, we've talked for years about Canada's productivity challenges, but the idea that that's the kind of thing that will help us with some of these lingering issues like inflation. What's your assessment on how Canada tackles the productivity challenge?
Well, we need to broaden out our industry. If you look at the Canadian GDP, 20% of Canadian GDP is related to construction and housing. It's hard to gain productivity in an industry like construction, where I still need one guy with a hammer putting in one nail, right? It's very, very difficult to be more productive that way. If we were to open up energy, if we were to open up mining, that could lead to productivity gains. If we continue to support a technology sector, that could lead to productivity gains. But when we're so focused on construction, productivity is the consequence.
I heard one former Bank of Canada official tell us that because we've had to become so housing obsessed, the focus people have to be part of Canada's housing market, even if you got in and on paper that's been beneficial to you, that has sucked up a lot of time that we could have been using towards some of those other sectors.
Yeah, a lot of time and a lot of capital. Think about that too, in terms of the housing market, how much we contribute there that leaves a gap in investing in other areas.
We're going to talk to a leading investor later who has been speaking with a number of CEOs across the country about finding ways to get more money invested in Canada. There's this this push now to see even our pension funds investing more in Canadian companies right now. I only bring it up because in the Deputy Governor of the Bank of Canada's comments today, she did talk about the need for more business investment in this country. How do we attract more money to our sectors?
Usually it would be tax benefits. There's got to be some quid pro quo.